Okay, 9:03. Let's go ahead and get started. Thanks for coming to the Paycheck Protection Program Forgiveness in Vista webinar. I appreciate you guys all coming. Joining me today is Jenna Bonham here with Silvertrek. She's going to be helping to moderate, answer any questions that she can, and also moderate and ask those things, ask the questions at the end during the question and answer session. I encourage you guys to all use the question pane in GoToWebinar and ask as many questions as you can. She'll jump in as necessary to interrupt and as some questions are going to be pertinent to specific areas. I'll try to take all of that. We have an hour and a half today to go through how to fill out the application forms and how to use Vista to do that. There's a few ideas that we've come up with. Like usual, with the number of people that attend these webinars, I know that there's more smart people that are attendees than there are giving the webinar. And so if you guys have ideas or things that you've looked at and would like to share, it's one of those, I'd love to be able to have everybody's microphone unmuted, but that's just not possible with the numbers. But feel free and say, I've also seen that this is a good report because of this, and jump in there. We have enough time to have this be a little bit more like a conversation, and the numbers aren't so huge that we can't at least access everybody's questions and respond to them. I'm Michael Kelly with Silvertrek Systems. For those of you who don't know, started Silvertrek in 2010. We're a Vista consultant company. We do both projects and managed services on Vista. You can see some of the stuff that we offer at silvertrek.net. Some of you first maybe heard about Silvertrek when we worked on the COVID earnings codes with Viewpoint, Gary Gilmore, and the team over there at Viewpoint, who were very helpful in making sure that we could have a coordinated effort to get everything out as the laws changed so rapidly this last spring. Our agenda today is that we're going to be going through a few different areas. I hope you can all see my screen all right. And if there's ever a lag or anything, Jen will jump in and slow me down. The first thing that we're going to be going through is the SBA's Form 3508EZ, which was a form that they pushed out to say, hey, there's some of you that don't need to go through the entire details, the rigorous details of especially Schedule 3508, Schedule A, and so they've published a 3508EZ. We're going to be going through that. We're also then going to be diving into the Form 3508 and the associated Schedule A. And we're going to make sure that we have we're going to detail out where we get this information, how we use. I've put together a little spreadsheet to help you with some of the information, to gather some of the information, do some of the manual calculations that you'll need to do in order to fill out Schedule A, especially Schedule A's tables 1 and 2, and how to access Vista, where the information resides in Vista, how to do some of these calculations, and my understanding of some of the assumptions that have to be made, etc. And then directly after this webinar, some of you guys have signed up for that. We're having just a quick half-hour break. But then directly after this, we're having another webinar where we're going to be going through the forms and the reports that we've built, the premium product, where we've built a few of the things inside of Vista so that you can do some of this calculation easier for those of you who have a fairly complicated setup or have many employees, and doing the forms directly, doing the things in the spreadsheet would be onerous. So afterward, we're going to be talking about the custom reports. The idea for this webinar today, for the next hour and a half, is that Vista by itself allows us to do everything we need to calculate the forgiveness form, both the EZ and the 3508 and 3508 Schedule A. All of the work that we're done here is following in both cases is with the assumption that you followed the standard setup for the COVID-19 earnings codes. So the viewpoint recommendation standard setup of setting up the earnings codes there and setting up the liability codes, et cetera, with the medical and Medicare, et cetera, because that has some implications on this by the law. So that's our agenda today. So the first thing that we're going to be going through that is the PPP loan forgiveness application 3508EZ, which I've taken a screenshot here and put into my OneNote, my whiteboard here. But the question that comes up first, before we can even get into the details, is, am I eligible for using the 3508EZ? And this is something that even us at Silvertrek, we've had to answer this question as well, because with a lot of the laws changing and whatever else, we weren't exactly sure. We are recipients of the PPP, and we also have been able to take advantage of the COVID earnings. So we were looking at this and saying, is there any implications here? And so we realized that there's basically a couple of things that we had to think about as we're doing this. So the first question that we have to answer is, can I use 3508EZ? And the answer to that question is based on three specific clarifications. And you have to be able to, on the checkbox, and this is on the PPP loan application form instructions, which I have printed off here if you guys can see me in the webcam. There's essentially three different options that you need to be able to check, one of the three. First of all, if you're self-employed. If you're self-employed and you own Vista and you're on this webinar, I want to talk to you. I would imagine that none of you are going to be checking that box, but if you are, that's great. That means that you're self-employed with no employees. Second is a two-part. First is you did not reduce salary and you did not reduce hourly wages more than 25% during the covered period, when you're comparing the covered period, and we're going to get into a lot of this, covered period versus the time between Jan 1 of this year, January 1st, through March 31st. So we're saying, did you reduce the salary between the covered period versus January 1st? And you can check this box if that's true, and you did not reduce number of employees or hours of employees. What they're saying is basically, hey, you didn't reduce the salary? Good. You didn't reduce the hours or the number of employees? Good. You can check this box, and then yes, if that's true, you can check this box, and yes, you can use 2508EZ. If you've reduced the salary, if you only reduce employees but not salary, you can't check this box. If you only reduced employees but did not reduce salary, you can't check this box. Both of these things have to be true in order for you to check this box, that you have not reduced the salary and you have not reduced employee count or hours. The third checkbox then is a similar and situation where we have two conditions before that you have to meet in order to meet this. The first is exactly the same as above, that you did not reduce salary. And I'll abbreviate this as salary. This is, you did not reduce the salary minus salary. The and in this scenario is different than the above. And the and in this scenario is that it says, and I'll read it specifically, the borrower was unable to operate during the covered period at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st, 2020 and December 31st, 2020. And so if you were unable to operate during the covered period, unable to operate during the covered period, due to COVID. So you did not reduce your salary or hourly wages by more than 25%, and you were unable to operate during the covered period due to COVID requirements. Then you can check this box and you can use 2508EZ. So for many of us, that maybe isn't the case. We were not able to use 2508EZ because we did reduce the number of employees, or possibly we did reduce the salary, or possibly we did not reduce the salary, but we were able to operate the entire time. So Silvertrek was always considered an essential business. We were always able to operate. We wouldn't be able to check that box. And so depending on if you can check one of these three boxes, then you can say, yes, I can use the 2508EZ. I recommend reading the details of the SBA loan forgiveness application form on these three checkboxes. This is the very first page, page 1 of the application form's instructions, and you can read those in their full detail. I have a question here from Kathy, who said, is the number of employees, is that measured in FTE? And if you look at the second box here, I can read this specifically. The borrower did not reduce the number of employees or the average paid hours of employees between January 1st and the end of the covered period. So it's not talking about specifically FTEs here, Kathy, but it is talking about the number of paid hours. So if you did reduce people from a full-time to a part-time, then that would fall under this. You did reduce the number of average paid hours in that case. So we do have that. As far as the number of employees itself, that doesn't say specifically FTEs, but I would imagine that that is what they're talking about here. That the number, you did not reduce the number of FTE equivalent employees, because that's everything else that they've clarified, including in their FAQs. If you haven't read their FAQs before, we've referenced those in earlier webinars. It's an excellent guide. There's a lot of answers to a lot of questions on their website there. Michael asks the question, if you use the EZ, do you have to? My understanding is that you still have to prepare all the supporting documentation. That's absolutely correct, Michael. So one of the things that the EZ form asks you to do is to prepare all the documentation to basically prove that you do follow this. You do not. My understanding is you do not have to follow the EZ form, or do not fill out the EZ form if you don't need to. Even if you can check one of these things, certainly since you need to have the documentation handy, and you need to be able to calculate things like the reduction of wages due to COVID earnings, etc., then sometimes just filling out the Schedule A form, even if you end up actually submitting this form 3508EZ, not 3508 standard, would be recommended, because since you have to have the supporting documentation anyway, then filling out the Table 1 and Table 2 can be a useful way of consolidating all of that supporting documentation. Good questions. Thank you already for the questions. I really appreciate everybody asking questions. All right. So we're going to go ahead and say, yes, I can use the 3508EZ. We'll talk about if we were unable to answer this later. No, later, when we talk about the standard form. So on this form 2508 easy, this is the one I downloaded, the most recent one from the internet this morning, just in case there was yet another change. As we all know, the laws have been changing at a fairly rapid pace, keep us on our toes, keep our brains plastic. There is a lot of information at the top that we're not going to talk about in particular. So we have all of this information here that we're going to that you're going to fill out based on your information. Your PPP loan number, that doesn't necessarily exist in Vista unless you've been creative with UT Fields, your disbursement date, all of these kind of things. And the only piece in here that is, I mean, of course, the payroll schedule is Vista related, but we all know that payroll schedules can be funny, especially when you get into things like bonus periods, extra pay sequences, differences between how salary people are paid. Maybe they're paid bi-weekly, hourly people are paid weekly, et cetera. That can be fairly confusing. But this portion here, the employees at the time of the forgiveness application here. So this is the only piece that I would say you would want to go in and verify. Often people just go to PR employees, they go to the grid and they filter by active. And so you can count your active employees. Now, for those of you who are using the HR module, I would recommend using the HR module termination date, et cetera, to find out how many active employees. There's lots of reports that show active employees, but this is probably the standard way that I've seen. So if you want to make sure that you have, that's basically the only place that you say, how many employees do I have at the time of the forgiveness application? This is also the time of loan application. This would be basically when you said I'm ready to get this loan, you applied, and you're going to be doing some comparisons here. Note that this is informational. When we get into the FTE calculations and the reductions related to the FTE calculations and the safe harbor requirements, that kind of thing, that those are going to be coming in at a later time. Okay. Next thing that we have on here are, whoops, I went too far down there. These three. So the first is covered period, second is alternative payroll cover period if applicable, and the third is if borrower together with affiliates received PPP loans in excess of 2 million, check here. First of all, that covered period, generally speaking, under the new guidelines, is the 24-week period that the revised law allows. So that we can take the period from the date that we received the funds to the date to 24 weeks later. And there's been lots of webinars. CFMA had a great webinar talking about covered periods and the nuances thereof, which is not my intention today to talk about those. Alternative payroll cover period is that, generally speaking, is the 8-week covered period, if applicable. There has been a lot of conversation online and between me and clients about whether or not you can use something in between 8 weeks and 24 weeks, if that's advantageous for you. I've definitely heard conflicting things there. Certainly so far, I haven't seen anything specifically from the SBA that allows for that, but there's also nothing from the SBA that I've seen that disallows for that. If any of you guys have seen something that specifically calls out, says, yes, you may use 16 weeks, please let me know. I've read some articles that people have sent me that said one thing or another, and it was an interpretation of an article that was interpreting the law. I haven't yet seen anything that says you can specifically use 16 weeks, for example. But the covered period basically says, here's my 24 weeks. This is when we received the money, and this is when we're going to disperse the money. And for things like payroll costs, et cetera, we're using all of the law that talks about, the paid dates, et cetera, in that time. Luckily, with the extension to 24 weeks, most, if not all, probably not all, unfortunately, people who had to actually reduce their head count, but most people will be able to use their full funds. One of the interesting things at the beginning was that we had 2.5 months of funds or 10 weeks of funds available to us, and yet we were only able to use 8 weeks afterward. That, you know, it was based on payroll funds, but still we were only able to use 8 weeks to ask for to apply for forgiveness on this. And in our case now, we're able to apply with 24 weeks, which should give us enough time to use all of the funds that were available to us. So choose your cover period, 24 weeks, or choose your alternative payroll cover period if applicable. Now, one of the things that you can do is you can go in, if you've already used all your funds, you can go in and put the covered period in here, and even if it extends out to the end, and do all your calculations and see where you would fall if you're allowed to submit that now. And you'll work directly with your bank, the bank that received those funds, or sorry, that dispersed those funds to you to get this through to the SBA. And then, of course, that last checkbox is easy. If the borrower received PPP loans in excess of 2 million, check here. So we can just check that there was those specific guidelines about whether or not that, you know, basically the scrutiny that the SBA and the audit commission that was authorized by the law is going to give to your particular loan. Okay. The payroll cost is the next section here, and this is the biggest section, I would say, or the most complex portion of this loan, of the forgiveness of this loan. And the information exists inside of Vista for this. A couple of things that we need to think about here when we're talking about the payroll costs. One is that what is payroll costs? And the second is how, if those payroll costs are reduced in any way, that how do I calculate that? So the payroll costs that we're allowed to use and to populate this field with are as follows. So first of all, we have all of our regular earnings, and by regular earnings, this is called by many different terms in Vista. It's oftentimes people will talk about true earnings, the earnings that show up as something that they have to put on their W-2, right? So this does not include things like per diem payments, does not include reimbursements, but it would include taxable liabilities. So if you have, for those of you who have gone live more recently or changed with the times, and you're using taxable liabilities rather than an earnings code and deduction to match, you would have things like maybe a truck allowance that's taxable, or you know, there's different items on there. Truck allowance might be an earning. Truck allowance, I've seen it in some cases set up as a taxable liability, etc. Different taxable perks, gym memberships, that kind of thing, that are a liability that the company pays on behalf of the employee. So all the things that we would need to put in and say, these earnings codes, these liability codes are something that is taxable for the IRS, for Social Security, and for Medicare, all of our regular earnings. Now, this is less the COVID earnings. Even on form 3508EZ, this is less our COVID earnings codes. And that's important because we cannot count those. The law was very specific about this. Those must be ignored entirely from all calculations. And if you were able to take the credit for your COVID earnings on your EFTPS, or reduce the amount you paid in for your EFTPS, then you cannot also apply for forgiveness for those same earnings. Then we also can add in a few other of the employer liabilities that are not necessarily taxable. So of the liabilities that we can add in employer medical. We can add in retirement. And we can add in what's called in there SUDA and other other state local taxes. So we can get our employer medical, our retirement, and other state local. It doesn't allow for to calculate anything other than those things. The complication possibly with this is and of those of you guys who are part of the earlier COVID webinars, is that there is a relationship between your COVID earnings codes and your employer medical. So we were able to take a portion of your employer medical as a credit on your EFTPS payments via the COVID-19 or the FFCRA, Families First Coronavirus Response Act. We were able to take a portion of the medical payment that you paid on those already. So you've already received money for those, and there is no double dipping. So you can't both take the full amount of the medical as a portion of your forgiveness on the PPP if you've already taken your employer medical on the other piece. Now, the COVID earnings also allowed for other things. For example, it wasn't subject to Social Security, and it is, and you were able to take the Medicare portion, et cetera, et cetera. There's different rules about that. But we need to make sure that we're not double dipping on the employer medical piece as well. So I'm going to switch now to Vista itself and show you a couple of places that we can look to actually find some of this information. And this is where, if you guys, as I'm digging through this, and you guys say, hey, Michael, that's a great idea, but why don't you think about this too? Feel free and suggest it, and I'd love to take your suggestions. I'm going to go ahead and present a different screen. Okay, here we go. And we have here my test system. Silvertrex Systems test system on our remote desktop, and we have the first thing that we need to be able to do is we need to be able to say that what are the standard reports that I can use to pull my regular earnings for this time. Now, the first thing is you might already be asking, well, wait a minute, I needed to know something before this. I needed to know something back when you were talking about whether or not I was even able to use this. Do I have any reduction in salary? Do I have any reduction in hours? One of the first places that I go to look at all of this, because it's used in so many different areas, is the accumulations report. And the accumulations report, the employee accumulations report, is something that ends up getting used an awful lot in many different places. The first here, let's see, employee accumulations. So I can look at my employee accumulations, and I can run this for a set of months, or I can run it for a current month, etc. So let's just say, first of all, that I wanted to know, well, for my, whether or not I reduce the wages back on whether I could even use this EZ form or not. Did I reduce the wages of the people more than 25% from January to March? So I could run this from to March, and I'm going to say, hey, I want to begin this on 120, 320, and I'm going to go ahead and print the employee detail and the group totals and run this for all groups. I'm also going to include my inactive here. So if I did have to lay anybody off, I need to be able to include them on this. Only the active employees wouldn't give me everything I need. So I can run this, and I can go all the way down to the last page here, the last 2 pages, see my totals for my company. And so now I have my month to date, which would just be March, and my quarter to date, and my year to date, which happens to be the same in this case for the first quarter of the year. And I can see all of the earnings codes that I have, and I can see all of my deductions liabilities. And I can see one of the things that I was asked earlier to say is I did not reduce the annual salary or hourly wages of any employee more than 25%. The easy way to do this, and you can do this in an Excel spreadsheet, of course, too. Depending on the number of employees that you have, it might just be as easy to run this. and say for the last month of the covered period, do you have did they fall in here? Did they fall in the same range as far as the amount of earnings? It's extremely difficult, though, for many people to clarify or to prove that the salary or wages has stayed the same because of two real big complications. The first is if you're working prevailing wage work, a non-union prevailing wage, and your employees are changing their wages all the time, well, it's likely that their wages aren't staying the same, and it's not going to be easy to make this comparison. Second is most, if not all, construction companies end up working a bit of overtime at times, and so you're trying to compare wages. Definitely, the overtime wages do count here. So if they worked a bunch of overtime in the winter and they're not working any overtime during COVID, you know, that would qualify as a reduction in wages. And bonuses are another thing that kind of throw this off. It doesn't, you know, bonuses are taxable wages, and so if they got a bonus in February and they haven't received a bonus in the spring, that would also be a reduction of wages. So you need to be able to look at this and say which of these codes come in. Now you can see here that for all of our company, you know, in this test company, all of our employees and everything, what we have, the regular overtime, the salary, those are all what we call true earnings, or in some cases, or the regular earnings in the case of this SBA loan. You can see here we have a draw to an owner, and that draw to an owner wouldn't be counted. We have some PTO codes, which would, right? We have some per diem, which would not. You have to be able to pick and choose and go through this and add up so that you can get this. Now, this PR accumulations report already has the star, the asterisk by default, and this is based on the PR earnings code true earnings, so you can see the total true earnings. So this has done the math for me, and you just need to confirm that your total true earnings for a month, or in this case for a quarter, is truly the same as what you need to have is really what you need to get for the payroll costs as associated with the SBA. It's likely that it's the same in your case, but it's not guaranteed. I definitely recommend reading that and working with your CPA to understand what is counted as true earnings. Further, on the last page here, we have all the liabilities. In our case, in our test system, we don't have any taxable liabilities that are actually, you know, counted as true earnings. But you might also have to come in here and add things in, like those gym memberships or something else that's a taxable liability to get your true earnings. So then the other thing you can do for this employee accumulations is we then go to the current period. Now, what's an interesting thing for this is the employee accumulations table is a monthly report, and it shows us the most granular it gets is monthly. And unfortunately, your guys' covered periods isn't necessarily going to be monthly. If it is, that's great. If you received it, say, right at the end of April, so that the first payroll was May, and you end up having a nice clean set of data, then you can use this employee accumulations. But in many cases you can't do that, and then in those cases you have to use the payroll register or the payroll register totals. These are both good reports. Payroll register totals possibly is going to be a better one for this, and say and run it for, because you can run it for multiple payroll groups. Run it for the groups that we care about here. So in our case, we have to go to the first one here, and we're going to grab 4/26. That was the first payroll end date where we received it in our test system here, and then we can go forward and we'll say we're going to do it for 8 weeks. We're going to apply early, the alternative covered period, and preview this. So this is the total of these same earnings, but for these dates: earnings, deductions, liabilities. And so this payroll register totals is another report that should be able to get those same things for you. Now, what we can do with this payroll register totals and is we can now calculate how we can take like I said before, it doesn't have the true earnings codes, which is a little bit annoying here. It doesn't have, so you have to subtract this out yourself. But you also have to subtract out anything that was paid out. You can see here we have a couple of earnings on the caretaker and the family leave. We can subtract out those, and then we can subtract out this medical insurance, right? So here's our medical insurance, 5205, which we've paid in there, and we can subtract out the portion of that based on what we've paid out here. As you guys, some of those who are in part of those earlier webinars, remember, we did put together a spreadsheet. This is still available to you on our website. This is simply calculating the paid leave reimbursement calculation. So this is available on our on silvertrek.net under the COVID earnings. This is just a way for you guys to put together the amount that you're paying for regular and amount of hours for regular, amount of hours for caretaker, and it was calculating this proportion of the medical liability. In other words, of this $5,000 we see here, how much were you able to take? This was just saying how much were you able to take already on the COVID-19 reimbursement. So in this case, $57, and we could add that up for those times where we had COVID earnings and reduce our payroll costs by that so that we're not double dipping. So this is a way for you guys to double check that you're not taking that medical portion of the reimbursement twice. It's easy enough to take the earnings reimbursement because the earnings reimbursement is simply these two numbers here on the register totals or on the accumulations report. It's this number here that gets a little more complicated. In our case, we're saying, well, if we had these caretaker and family leave, that therefore we must have taken some medical insurance reimbursement. If we took some medical insurance reimbursement, how much of this did we already take and we can't apply for as part of our payroll costs now? So that should be able to be calculated. But we can basically add it all up and put it in there. One of the things that we've done in order to be able to have you justify this, we've put together a spreadsheet for you, and we'll be going through this more when we talk about the Schedule A, because it has a lot more implications on the Schedule A, especially when we get to Table 1 and Table 2 of the Schedule A. But here you can see we've just, if you guys would like to fill out a spreadsheet, have it on hand to say, this is how much I've been able to, how much money each employee was paid during this. You can see here I have it set up for 24 weeks. And then in our case here, we're just applying after 8 weeks. And so how much did Hillary Ponder make? And what was the COVID earnings, et cetera, et cetera. We have this so that you can fill this out. Those of you guys who have access to your payroll data in Excel, this could be just a copy and paste or a modification of that. And there's some formulas in here that should make some of this stuff easier. One of the things that we've done is this allowed medical, and the allowed medical follows the same rules as that earlier spreadsheet that I just showed you. Basically, we're saying, hey, I paid $104.01 that week for Hillary Ponder's medical, and how much of the hours were COVID hours and how much were regular hours. And since 0 were COVID, then the 104 is allowed. You can see down here, when we get into Lashmer Gardner, where they actually had COVID earnings, then we can see that here when they were off because of COVID, 40 hours were on COVID, 0 hours were on regular, that even though we paid $40 for the employer medical the entire 8 weeks, the only allowed medical is the time where they were not off on COVID, and this is taking care of that for you. So this spreadsheet, this PPP worksheet spreadsheet, is available or will be shortly available with the recording of this webinar, so you guys can kind of look at what we're doing here. The retirement, SUTA, and other state local, they don't play any role here as far when we're talking about COVID. They do, however, play a role as far as calculating our payroll costs. And so what we can do here is we can just basically add up the allowed earnings, the allowed medical, the allowed retirement, and the allowed SUTA in order to calculate that out. The PR payroll register totals or the PR payroll register will allow you to get this information. Obviously, if you're going to fill out the spreadsheet, you're going to have to get it by employee and put it into that yourself. Okay, before I move on, let's see, was there any questions that I can answer here? Let's see here. Suzanne has a question. If the date alone is the 4/28/20, should the monies be applied to any pay dates thereafter, or the weeks when we pay the week, which includes 4/28/20, could be a week later, etc. So there's a lot of conversation about that online. What we're taking, there's actually a specific allowance for that, so that rather than using the date that you got the money, you can forward date that until the next the beginning of the next the pay run, basically, so that it lines up easily. The SBA has allowed to make that, just to make your calculations simpler, rather than having to do like a prorated portion of the first week and prorated portion of the last week. And for this webinar, that's what I'm recommending. I do recommend reading the laws, especially if you feel like that's going to have an impact. If you're if what you see on your first week was different than what you see on your last week, and it's going to change the amount of your forgiveness, then I would definitely look into the rules there. But for our assumptions here, we're using the allowance that the SBA has given to do full weeks of payroll, and that simplifies all your calculations. Certainly, you can do something differently, and all you would have to do, and on this spreadsheet here, is you would have to prorate this first week for Hillary Ponder and prorate this last week for Hillary Ponder, including prorating the employer medical, retirement, et cetera, in order to make that work. I hope that answers your question, Suzanne. So the paperwork, Kathy, the paperwork reduction Act notation says this easy form is supposed to take 20 minutes to gather and complete this form. We have 230 employees. These calculations are very cumbersome when calculating all this per employee. I agree. The complicating factor here is this payroll costs and the COVID. So what makes this very cumbersome is saying that there is a law that says you can't double dip. And if you've already taken medical insurance, then the credit for medical insurance because of COVID, then the SBA is incorrect in saying this will only take 20 minutes to gather. However, if you didn't take any, if you were one of the lucky ones that didn't have COVID affect you, or you weren't able to take the credit for some other reason, then this is fairly easy. You can just fill this all out and go from there. Add up your payroll costs, your total payroll costs, add up your total medical insurance, and as long as you're good at the 10 key, it probably would take you about 20 minutes. It's only adding up the COVID earnings that it's going to really complicate things. As far as the documentation after the fact, that to make sure that you've got all your I's dotted and your T's crossed, I would guess that would probably take you more than 20 minutes anyway, just to file it in a way that you could quickly tie back to those numbers in the case of an audit. Seems fairly rare based on the if you have less than $2 million in a PPP, but of course we all want to make sure that we're doing the right thing there. Okay, what about health and welfare benefit payments to union employees? Elsa, thank you for that question. The health and benefit employees benefits for union employees do count. If the employer made them, they do count towards as medical liability. As far as I can tell from the law, I have seen nothing that says otherwise. Please correct me if any of you guys have seen anything else. But my understanding is, just like with the COVID, that the COVID that was allowed credit on the COVID, that this is also allowed credit for the forgiveness for the PPP. Debbie, how are you adjusting for employees who were quit or for fired for cause? Well, the employees who quit, that's one thing. Now, the law allows for, you do not have to count, and this is getting more into the FTE, which we'll talk about in a bit. I'm sorry, I'm bumped the table and I'm wiggly here. If somebody quit and you put in a and you can prove that that it was not because of you but because of them, and or you have given them an offer saying that, hey, you can have your job back, then you don't have to use them for the FTE calculations, and we'll show this at a later time. When they were fired for cause, however, the fired for cause is a little bit of a different situation because that is actually a reduction in headcount, and there's a lot of nuances there, a whole lot of labor law and case law about when somebody was fired for cause and what justifies firing, if you're in an at-will state, if you're not in an at-will state, et cetera. If you have a contract with an employee, if there's all sorts of different things. Is there compensation that was given to them after they were terminated? Those kind of things. But it's just a reduction. At that point, it's just a reduction in FTE count. So you fired them for cause, it's a reduction in FTE count, even if it had nothing to do with COVID. The assumption being that if you fired someone for cause, and COVID is if COVID was impacting your business, that you would have hired them back, and they're trying to say, well, we wanted you to use this money to keep your head count up. So if you fired someone for cause, you should have replaced them. I think that's what they're saying anyway. Maybe I'm reading between the lines too much, trying to interpret what all of the senators and representatives were thinking when they drafted this law. Is a little bit hard sometimes. Okay, if your union rate per hour has gone up and salaried employees have stayed the same, do you have to worry about the payroll decrease? Total payroll decreasing? Not likely. I would say that you're probably pretty good there. There's a chance that your salary employees have decreased their hours somehow, but overall, but I would say it looks like you're probably good there. So a good question, Penny. Let's see here. I have two questions from Monty. He says, do you hear about the race between the lettuce and the tomato? The lettuce was ahead and the tomato was trying to catch up. Thank you for that, Monty. We need levity in these trying times. His other question looks like a little bit more serious. Have you heard anything about health benefits for self-insured? Can you use a reimbursement calculated based on projected weekly or hourly amount, or do you have to use the actual cost? So that's a really good question. Yes, that question has come up several times, and if you're using a calculation, what it says, I wish I had it to hand here exactly what the wording says on the. I believe it was in one of the SBA FAQs. I'll have to try to find it later for you, Monty. But that they allow you to do the standard calculation, not just the actual costs. So this isn't just the paid, but this is the calculated amount. So it's the amount that you are associating with the payroll, provided you can substantiate that association in an audit situation. So for self-insured, that would be the case. It would also be the case if you're in some kind of situation where you've done prepaid medical. This is fairly rare, but some people prepay their medical for one reason or another up front. Or if they have some kind of other payment plan other than that. It's the amount that is associated with the hourly or salary wages in your payroll system. So that was the same for the COVID earnings. Good question. I would say that the first question maybe wasn't as applicable as the second question, although maybe more enjoyable. Okay, I'm going to move on here to the next lines. Go back to my other screen, if I can do it without turning all you guys off on accident, ending the presentation or something silly. Okay, so I'm back on my whiteboard here. The next three are easy. And we have we're adding up our business mortgage interest payments, business rent and lease payments, business utility payments. If you are paying interest payments on your mortgage, hopefully these are all AP reports, standard AP reports, stuff you guys know like the back of your hand. The vendor totals is a good one for this. Ideally, it's a good one for this. In some cases, you might have to tease out, say, if you're paying the same vendor for rent as you are for something else, like maybe you paid your landlord for a tenant improvement or something. But a mortgage interest you can pick, you can't take a credit on the principal, but you can take credit on all the interest that you've paid. And if you split that out on a separate line on the APTL, the vendor drill downs would be able to get that for you, so you can drill down all the way to the line level. Otherwise, you can use that same vendor drill down, look at the attachment if you're attaching things. I hope you're attaching things in AP, and see what the interest payments are. Very simple calculations. This is simply addition. Add up all the business interest payments, add up all the business rent lease payments, add up all the business utility payments. For us, we pay triple net to our landlord, and we pay we have our rent, so it's on the same bill every month. Two separate GL accounts, two separate expense GL accounts, but only one bill. We grab that vendor. We say here's the time period, and for these payments, the SBA has talked about those payments that were made. So this is more of a cash basis situation as far as I can understand. And then the last piece of this is our calculations on this. So we have 3 calculations. One is just sum. So we add the amounts of 1, 2, 3, and 4. We enter in the dollar amount of our loan to begin with, and then we just take and we do our 60% requirement. So the original law said 75%. The new law that modified this at 60%. We basically have to take line 1, which is this line here, and we have to divide it by 0.6. And we say, we have to make sure, in other words, that our payroll costs are at least 60% of this, otherwise we can't get the full amount forgiven. So we do the math here, divide 1 by 0.6, and we get this number here. And then this one here is, in terms of Excel speak, the minimum of 5, 6, and 7. Okay, I forgot my equal sign. I know one of you guys is twitching. And we have to take the minimum of these 3 here, and that's what we're going to get forgiven. We're not going to get forgiven more than what we were loaned. We're not going to get forgiven more than the sum of our payroll costs plus our interest, et cetera, costs, and we're not going to get forgiven. We're not going to get forgiven more than our payroll costs. Let's see here. Someone said that they can't see my screen, which is a problem. Let's try this again. I'm going to go here and make sure that you guys can see the screen. Sorry about that, if you guys couldn't see me writing on that for a little while. Looks like maybe, okay, so you should be able to see my, you should be able to see the payroll register. Now I'm going to switch back to my first one, and now you should be able to see my my whiteboard again. Perfect. So what I went through before, I don't know when the screen stopped sharing. Sorry about the technical difficulties here. I just added the sum, the PPP loan amount, the payroll cost amount. These are just all 3 calculation fields here, these 3. And then we take the forgiveness amount, which is the minimum of those 3. So there was nothing fancy that I was doing there. And that completes your your form 3508 EZ, and 20 minutes later you're done. Good job. At least I hope it's 20 minutes. Okay, I'm going to go and move on then. We've spent quite a bit of time talking about payroll costs, and that was the easy form, right? We're an hour into the webinar, and we've only covered that first one. But what I have done is I've covered a lot of the information about the payroll costs that are going to be applicable to Form 3508 and 3508 Schedule A. And so we'll be able to quickly go through those portions of those. Second, let's just say in this case that we don't qualify for the 3508 EZ, or maybe we do qualify and yet we just want to fill out those tables so that we have those as substantiation that we actually did do those. We want to be able to say, yes, we actually are able to use this full form and use a full form to get our full forgiveness. There's definitely not going to have as many questions from the auditors in those cases. Especially when you get to this unable to operate during COVID, the covered period due to COVID, it seems like that would be a difficult one to substantiate if that's the only place that you can that's allowing you to use Form 2408 EZ. So I'm going to keep scrolling down here to this full form. And the full form has two parts to it. You can see here that this is the loan forgiveness application. And the next section is the loan forgiveness application, Schedule A. And the Schedule A has a couple of pages. It has a Schedule A worksheet, which has a Table 1 and Table 2, and some information about the FTE reduction safe harbors. So how do these relate? Well, what we have is our basically on our payroll costs here. So up above, roughly speaking, and I'm going to gloss over this in the interest of time, those things are the same or very similar. We have the payroll costs here. This, you can see here, is from Schedule A, line 10. So in order to do this, we have to zoom in to Schedule A. Lines 1 through 10, we'll calculate line 10. Line 10 is the sum, which we'll see in a bit. The business interest payments and etc. These are the same as before. The vendor drill down information grabs that. Or we put a UD checkbox and I have a custom report that allows us to add that up very easily. The FTE calculations, so this is lines 5 and lines 5, 6, and 7, that we have to take this from Schedule A as well. So this is also going to go into Schedule A territory. And the reduction quotient comes from line 13, you can see here on Schedule A. And then after that, our modified totals or our PPP loan amounts, this is exactly the same as it was on the EZ form. So we do our sum from above, we add our loan amount, we do our multiplication of the 60%, and then we take our minimum from the above, in this case 8, 9, and 10, and we get that. So the question is, how do we use the Schedule A and the Schedule A lines 1 through 10 and the other Schedule A? That's really the meat of the form 3508 as compared to the 43508 EZ, is the Schedule A form. So I'm going to scroll down here and look at this. Like I talked about first, the Schedule A payroll costs talks about the lines 1 through 10. So these ones here are all about the payroll costs. So line 10 is just a sum, and this goes on the application form itself. And everything above this is calculated from this. Note, first of all, how we have to drill down even further. Line 1 on Schedule A is box 1. Line 2 is box 2. And both of these and this entire section come from Table 1. We have, in our case down here, we have box 4, box 5, and we're talking in these cases, we're talking about Table 2. And then we also have down here a third table that they don't actually call Table 3, but I've called Table 3 because it's the third table that you have to have. Table quote 3. They don't say it's Table 3. This is specifically related to owners. There's some specific laws related to how you can calculate the owners. So then we have in the main section here, or sorry, in the middle, lines 6, 7, and 8, we have the totals that are allowed for employee health insurance, retirement plans, and taxes. And the only complicated one here, again, is employee health insurance, and it's only complicated if you have COVID earnings. So in order to calculate Schedule A's lines 1 through lines 10, which again, this comes back to being able to fill out line 1 on form 3508. So 3508 goes to Schedule A 1 through 10. In order to calculate line 1 through 10, I have to do these tables. I have to fill out these tables on the next one. And these tables, I'm going to keep scrolling here, are these tables here. The PPE Schedule A worksheet, Table 1 and Table 2. First of all, what's the difference between these two tables? And you can see there's one less column. The difference between table 1 and table 2 is anybody in table 2 are people who had received from compensation from the borrower more than 100,000 for any pay period in 2019. So this is an annualized rate of any pay period in 2019. I would calculate this from the payroll accumulations table, run that by month, make sure that in any one month they didn't receive more than the equivalent of $100,000 annualized rate. What gets complicated there and is not clear in the law is if they received a massive bonus at the end of the year, a Christmas bonus, and they received a Christmas bonus of, let's say, $20,000, but their salary for the entire year was $80,000. They didn't receive more than $100,000. Does that $20,000 bonus say that they received more than $100,000 annualized? And all of the reading on this states that yes, that does. In the annualized, if you annualize that $20,000 bonus, they would fall into this table. One note, and for those of you guys, we don't have time to go through all of this right now, but it's actually to your advantage to have people in this table 2 rather than the table 1, specifically because there is no salary wage reduction requirements for people who received more than $100,000 in 2019. In other words, the way that the SBA has interpreted this law is if you were paid more than $100,000 last year, then we don't care if you reduced their wages. They're part of the 1%. And so we don't care. And so it's actually to your advantage to have them fall down here. So annualizing those wages and having them put into table 2 will end up being a good thing, especially for your administration for the calculation. So what we need to calculate here is 3 things for table 1, box 1, box 2, and box 3, our cash compensation, our average FTE, and our salary and wage reduction. Salary and wage reduction is probably the most complicated. And then we also have to do our cash compensation, our average FTE for anybody who received more than 100,000 last year. One note, if they did not receive more than 100,000 last year, but they are receiving more than 100,000 this year, they go up top. So people who have now received more than 100,000 but did not previously go up top. Okay, in order to calculate this is where we get into our Excel spreadsheet. And I'm gonna pull this down into this screen here. Hopefully you guys can see this. Let's see here. There it is. Get the little Dropbox icon out of the way. So what we have in order to calculate these different boxes is we have to add up all of our earnings for all of our employees. We have to take away any of the COVID earnings so that we only have allowed earnings. We have to do the medical and the allowed medical. We have to grab our subtotal, and we have to do our COVID hours, which allows us to calculate our allowed medical. Just like we talked about before, we're not going to go into details now in the interest of time. You can see here the allowed medical was taken away there. We have people who have all of their information. We just fill this out across the board. We fill it out for all of the 24 weeks for each person. And the only reason to fill this out for each person for every single week is if you have COVID hours and you need to calculate the allowed medical. If you don't have COVID, then the granularity needed is the entire time. You could just have one line for everybody instead of having single lines for everybody. If you have COVID earnings, you'll have to calculate it at the level of each pay period. So then we can take the regular earnings and the total allowed earnings, and we can sum those up. Here you can see I've simply summed up all of my employees that matter, and we can return this plus the subtotal wages to that box, to that table in box 1. Now, to the tables box 1. That table does require this level of information, not this level of information. So for Joanne Ashburner, we're going to say this is my total cash compensation is what they call it, and this is my total of each of these I need to put into my allowed medical, my retirement, my SUTA, and other. I have to put these particular ones into my backup. All of that's going to be considered cash compensation. Now, the salary and hourly wage reduction, there's a lot of information about that, about what you're able to count on that salary and wage reduction. But we've put together a little spreadsheet here to help you with that. And you can see that it's a reduction not at the individual paycheck level, but at the total level. So here on Joanne Ashburner, you can see I have a wage reduction amount. And what this wage reduction basically says is, hey, since you reduced their wages, you can't take a credit for this. And this is the case here, the wage reduction calculation. So you can see here that our average wage during the covered period was 4,582, which was the hours, which means gives me my average wage rate of $27.32. In the first 3 months of the year, Joanne received this much money on this many hours, which was this much. So you can see here that in our test company, we've reduced Joanne Ashburner's wage from 69%. And this is straight off of the instructions, by the way. These you can see here, 1A, 1B, 3A, 3B. This is referring to the Schedule A's second page where it talks about the wage reduction and how to calculate it. So then we take the wage rate, and this is the higher wage rate, and we multiply by 0.75 because it's that 25% cutoff. Did you reduce it by more than 25%? In this case, yes, we did. We did reduce it by more than 25%. We reduced it by, looks like 31% here. Then we take our difference between this and this, so that's the $2.27. We take our hours per week in the Q1, so this divided by our 13 weeks that were in Q1, and we have 52.77. And we can see here that this reduction, 30B times 3C times the number of weeks, so in this case, we have this times that, so 52 times 27 times our 8 weeks, and we get to our reduction. And this would be calculated for anybody who you've reduced their wages by more than 25%. This reduction, I've brought over here and I've typed it in. You can see here I have a gold bar. This is at the employee level. And so I have my totals for my reduction column here. Reduction is a fairly complicated topic, but luckily we have 3 safe harbors. We have 3 ways out, 2 of which are called safe harbors and 1 of which is a way out that's not called a safe harbor because of the oddities of bureaucratic language. But basically in our ability to take it out, we can say we didn't reduce wages by more than 25%, right? We have a few different options, basically saying, especially under the new law, they provided for 2 safe harbors. One of the safe harbors is especially easy for those of you who are impacted. Safe harbor, I believe it's safe harbor number 1, is that if you were impacted by COVID and had to reduce your business activity due to any of the lockdowns, et cetera, that you can check this box and you can say, hey, this doesn't affect it, and you can move on from there. The other ones related to the safe harbors have basically say that in many cases, even if you have in some cases reduction of hours, that as long as you can prove it, you shouldn't have to take this reduction of benefits. And I encourage you to read that. Let's see here if I can give you guys the exact page of those safe harbor conversations. It's on, it is the instructions for PPP loan calculations, Schedule A instructions. They go through those safe harbors that you guys can verify fairly easily. So safe harbor number 2 is probably the most complicated one, and that's where you're comparing your wage now to what was paid on February 15th. So you can look at those safe harbors, which I'm just glossing over again in the interest of time. Definitely worth looking at if you think that you're going to have to reduce the amount of your forgiveness and you're going to end up not being able to get everything forgiven because it's a reduction. Check those things out to see if you can ignore this reduction entirely. Okay. So that's our salary and wage reduction. Average FTE, that's actually at the end of my Excel spreadsheet here. And it allows us to, it simply calculates our hours based on a 40-hour week. In some cases, if you guys are So here's our FTE. Sometimes it's going to be your hours are going to be based on 80 hours if you're biweekly payroll, etc. Or if you have some other pay period. This is at this level here. As long as it's greater than or equal to 40, you're fine. In some cases, like we talked about earlier with one of the questions, we have the ability to say that somebody's an FTE even when they're not. So the law allows if you've given an offer to somebody, for example. Also, it allows for, rather than doing what we've done here in the spreadsheet, which is calculate it exactly based on the number of hours, that we instead of doing it based on the number of hours, that we do it, we assign a 1 or a 0.5, and you can read the rules associated with that. And basically, anybody who's part-time is 0.5, anybody who's full-time is 1, and you can do the simplified version. There's some rules that simplify that for you. But we have to put into this table, back on this thing here, whether or not what their average FTE is, and then we have to summarize that here. Averagize that, is that what it's called? There. We have to do the same thing then for table 2. All the people who have made more than 100,000, with the exception that we don't have to worry about any wage reduction for them. So table 1 and table 2, we'll fill that out. We'll have those listed out in a form that an auditor can get to easily. And we're going to pull that back in box 1 and box 2 here from table 1 into this. And we're going to pull this one from box 3. And our Excel spreadsheet will help you calculate all of those. Or you can do it yourself in a different Excel spreadsheet. Cash compensation, box 4. From this is our table 2, box 4. This is our average FTE, box 5. Again, from those same tables. It's just that this is the information related to people who made more than 100,000. Next, we have to again restrict in this green section here, lines 6, 7, and 8. We have to restrict the amount of the employee health insurance, employee retirement plans, and the state local taxes. We have to restrict the employee health insurance for the COVID earnings. Back on our spreadsheet, just like we talked about before, you should be able to summarize this here, the employer medical and the allowed medical. So this person, Joanne Ashburn, had no COVID earnings, so everything's allowed. Here we have less, and so less is allowed. You can grab the total based on the allowed medical if you do have COVID earnings. The other two are fairly easy: employer contribution to employee retirement plans, including your union plans that you asked about earlier, and state and local taxes, including SUTA. Line 9 is the compensation to owners. This is what we call table 3. And table 3 is interesting. There's 2 specific rules about table 3. Number 1, this can't be more than, so we're not, the owners are not allowed, so not allowed to be more than 2019 annualized to 100,000. So you can't get forgiveness for more than 2019 if the owners got a bonus because of the PPP. And it's also limited, rather than the 24-week period, it's limited to the original 2.5 months of wages. And so if you're using the full 24 weeks, of course, that's more than 2.5 months. 2.5 months is 10 weeks. So they basically made an exception in that law in order to not have the fat cats that are getting the PPP money, in order to not get that portion forgiven. In this, when you do your allowed wages on your spreadsheet, what you'll need to do is, if say Joanne Ashburner was an owner, then on your table 3, what I recommend doing is looking at this total allowed earnings and making sure that it's not more than the 2.5 2.5 times worth of wages, and that's just $20,000 roughly speaking, because it's 100,000 divided by 12 times 2.5. So if an owner has received more than $20,000, then only the allowed wages for that 2.5 months would be the 20,000. I hope I didn't make that more confusing than it needs to be. They're also not allowed to make more than they made in 2019. They can't have given themselves a raise. Well, they can give themselves a raise. They just won't get forgiveness for that portion of the money. If it's an 8-week period, it's the original 15,400. What was it? 446 or something. If you're using the alternative payroll period or covered period of 8 weeks. Okay, so that allows us to fill out the Schedule A all the way through line 10, which means we can zoom back now to line 1 and fill out line 1. Then we can go to through our biggest business mortgage payments, rent, utility, fill out those. We add our salary wage reduction. So this is Schedule A line 3. So if we go back to Schedule A line 3, remember that this was simply Table 1, Box 3. This is that salary reduction that I talked about. It was that separate tab on the Excel document. And it was a sum of all of your employees' reductions in wages that you gave. So you enter that in there. So that's going to be a subtraction. We add the amounts and add the amounts above here, subtract the amounts in line 5, right? So it's going to be the sum of these less this equals this. And then we do our FTE reduction quotient. This is now Schedule A line 13. One of the more complicated things that we need to do is this FTE reduction quotient. And it really deserves more time than I've given it today, but this is the Schedule A line 13 here. This is the part of the safe harbor number 2. Basically, we need to be able to say, what was your average FTE during the chosen reference period? In other words, in your 24 weeks or your 8 weeks. And then what was your total average FTE? And this is only calculated, line 10, 11, and 13, if you don't fulfill these 3 safe harbors, or rather this one that's not a safe harbor like I talked about, this one that is, and there's 2 that are called safe harbors. So if you have filled out any of these 3, or I should say if you are eligible for any of these 3, then you do not have to enter in your FTE reduction quotient. The FTE reduction quotient is a serious reduction to your PPP money, and so it's for all intents and purposes. I hope that you guys can you fall under one of these: no reduction in employees or average paid hours, unable to operate because of lockdowns, etc., or if you satisfy the FTE reduction safe harbor number 2, which is the more complicated one on Schedule A worksheet. But if not, then you have to calculate it this way. What was our average FTE during the reference period, and what was your average FTE in general? Now this is adding lines 2 and 5 from above. So if we go look at 2 and 5 from above, that this is the table 2, the earners of more than 100,000. That's line 5, and table 1. And that's so the question is, what are table 1 and table 2? What is the time frame of those 2 things? Again, I'm scrolling again. Sorry for all of the scrolling. I hope I'm not making you motion sick. But you can see here that this average FTE, this is that box 2, right? And we have the average FTE here in box 5. So we basically have to pull the information from these FTE columns and put that in there to determine this quotient. And then this quotient is easy. We just take our average FTE during the reference period, we take it by the quotient of our average FTE in general, and that is our reduction. So let's just say that this came out to a 0.5, then we would end up reducing our forgiveness by 0.5. What's interesting about the 24 weeks thing is that since the original loan was only for 10 weeks worth of payroll, there's a chance that even if you had a huge reduction quotient like this, that you would still be able to get your full, it's at least a chance that you would still be able to get your full loan forgiven, even with a large reduction quotient. Okay, I know I glossed over that FTE a lot faster than really it deserves. There's a lot of information there. One thing that I recommend doing for those of you who have a Colby Fact Finder of 10 or above, that you should really look at the instructions on this. Also, the instructions are actually quite instructive. Surprise, surprise. And also read the SBA FAQs related to FTEs. There's been a lot of conversation about this, a lot of information related to what's counted as FTE and what isn't. There was, and certainly many people, including the CFMA, have put together webinars from CPAs, et cetera, to discuss those individual items. All of these FTE calculations, though, can be found inside of Vista. So, I mean, all of the hours can be found inside of Vista in different places. Again, the payroll register totals, which I have up on my other screen, I'm a little bit nervous to even switch now, but that has all of your hours that you'll need for that on that payroll register totals in Vista. Okay, let's see here, any questions in our last few minutes? Let me pull it up here. Where is my questions pane? Where in Vista is the exact report to use to export to tell all the tables? Kathy, you know, Kathy, I'm going to send that to Gary Gilmore, and who is the product head for Vista. There isn't one form that exports everything you're going to need. Certainly there is different things that you can export. You can export any report. I mean, I can export this report here that I have up on my screen. Okay, that's it, I'm switching screens. All right, cool. So for example, I have this payroll register totals, and if I wanted these hours, this is my total hours for these payroll end dates. I can go ahead and export this report, which I'm sure you guys know, and I can pull this up in Excel. But there isn't one report necessarily that's going to give you everything you need, especially when you have the complication of the COVID earnings. I wish I had a better answer for you. As far as the lettuce and the tomato, Monty, it looks like Justin says he doesn't care it at all who won. Let's see, any other questions here? What if all employees are owners, Abby? Well, then you only use my table, quote unquote, 3, and you just reduce it based on their 2019 earnings, annualized to 100,000, or if you're using the 24 weeks, the $20,000 number, which is the 2.5 months worth of their salary. Good question. Okay, Jen, any other questions that I should follow up on in the last few minutes here? Okay, we have one here from Penny. Do you have to calculate line 2 average FTE from Schedule A? Hold on, it's not. If you meet the FTE safe harbor. No, if you meet the safe harbor, then you just say, I'm at the safe harbor, thank you, have a nice day. Good question. You don't have to calculate anything. Okay, well, if you have any other questions, feel free to continue to submit them. One of the, in a half an hour, I know some of you guys will be joining me. We're going to be discussing the custom reports that we've built. So and this is roughly it here. You can see here where we're able to take out the earnings, what are allowed earnings. We're able to calculate the wage reduction, the FTE information, and then also what we've done to just make this a lot easier for those of you who have COVID. You can see here we have the COVID earnings here, and we have the medical calculated with the COVID earnings in mind. And then also anybody who has a wage reduction, that's just calculated out here. This 956 that I showed on that spreadsheet, that calculates out the wage reduction, and it summarizes all at the end, of course. And then we also have the lines here for Schedule A themselves filled out based on the information from above. So you can see here, here's my cash compensation, FTE, salary, etc. And I fill all of this out. We fill all this out from above. So I'm going to be going into some of this detail in half an hour. I hope you guys can stick around for that. In the meantime, this webinar will be sent out so you guys can review it after the fact. Mostly, I think because of Monty's jokes, you want to make sure to write those down for your kids, all of you dads out there. And the other reason is that the other thing we're going to be sending out is that the Excel spreadsheet, this one here, and it is on my other screen, so that you guys have an ability to actually add this up. You can kind of see how we've put this together with our formulas, and then also probably more importantly, our wage reduction calculation here, which allows you to calculate how much you have to reduce the wages, or what the dollar amount is based on the information in Schedule A. Okay, well, thank you all for attending. I appreciate you guys coming and spending your time here. Hopefully we will see you in half an hour. Get up and stretch your legs, and talk to you soon. One question before I leave. Just before I leave, there was a question of where you're going to be able to find this here on silvertrek.net. That's our website. We have our payroll protection program on a banner at the top. We also that you can click learn more on. On the payroll protection program, we have the webinar recordings, which you'll have here. It'll also be emailed to you. And then also on the documentation and FAQs, you'll find the Excel document that you can download. So yes, you will be able to come and get this, silvertrek.net, and then you can either click through or else type in PPP-resources. So it's also available you can also look at the events that we have and look at the information that we have here. All right, thank you very much, and we will be talking more soon.